Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, the last day of the month, April 30th, 2015, and this is the daily report for gold and silver. Dramatic sell-off in the precious metals markets, in the equities markets. First to gold, you can see on the screen we're down about $27, breaking hard below 1200, 1182.50, the high 1207. The low 1176. Silver also dramatically lower. As you can see, it's off about 3.5%, 1609, down 58 cents on the day. The low is 1581 and the high 1670. We'll touch on silver in a little bit. No doubt a strong move to the downside today in the precious metals markets. Many of the complexes just getting hammered. FOMC meeting concludes yesterday. Statements are made, and then the wheels of interpretation start to kind of come into play. And what we saw just following some comments coming out from the FOMC meeting was a market coming from about 1209 down to approximately 1200. That was the low of the day. We had a weak dollar then, and that was supportive of gold, but not enough. We still saw the market close off about $8 on the day. Today we're seeing very similar activity with a weak US dollar adding $5, selling, just dramatic selling, down 26.50 on the day, a 21.30 net result or net change. So traders, we saw the market really take off to the upside last week, and then of course on Monday of this week we had a continuation. The question was that a two-day wonder? That's what I postulated yesterday. We had the market trading off about $8 on the day yesterday, and then this dramatic sell-off today. So where does that put gold prices in terms of the bigger picture, and what can we look for? And to do that, what we really want to do is to take a look at our daily chart in relationship to not only Fibonacci retracement, but our current Elliott wave count. Now, first thing that we want to look at, this is a daily chart that we're working with, and I've got a couple of different fib retracements, but the important ones that we're looking at is this one right here, because that really is just a retracement of this rally right in here. And when we do that, we talked about the fact that 61%, that's your 1172. 50%, I believe, is 82, and that was the number to watch. You can see that once again we've hit this low here, but now going to a 61% retracement of that move. More importantly, when we look at the overall picture in terms of the wave count, it is really giving us some pretty strong evidence that we have completed the final corrective wave 4 and are now in a final fifth wave. Now, what I mean by that is that, of course, we're in a bear count. So if we take it back from here, I don't have the entire chart on the screen, but 3, wave 4, wave 5 takes us into our ABC. And as we talked about yesterday, in a bear count, ABC is to the upside. And then we're getting our 5 waves, 1, 2, long wave 3, and then a wave 4. We've marked it as the top right in here at 4 because that's the high. If that's the case, then we are going into a fifth wave. So we've got wave 4 up. We're going into our fifth wave, and our fifth wave theoretically should actually take us below wave 3, which means that we will have a new low that precedes these lows that we hit here. Of course, we have this low sitting at around 1130. So my sense is that we could easily see this market track back to, on a technical basis that is, track back to these lower numbers in here. So one of the questions that I know as a subscriber you've got to be asking yourself is, with all of this recent activity, these market moves, we're sitting on the sidelines. We have been flat, these markets, and we didn't issue any kind of a sell signal. The primary reason for that is that we are still trapped within this defined trading range. We have seen these lows come back down, there's no doubt, but we've seen a series of highs up around 18 to 21 each time the market came to this point. 1, 2, 3, 4 times it has sold off and moved back into the range. At the same time, when we look at the bottom level, the one thing that we are seeing is that we have breached new lows here. Let me put that line in. And so we had this low that came in right here market trades back up to the upper area. We did get a lower low, but it maintained itself at the 72 level. On today's trading activity, it did touch almost to that point, but is closing above that, closing at 82. So traders, we're still within this defined range. I believe that if the market is going to break, if we are going to go into a fifth wave, and if we're going to see a lower low than the previous low that we had, excuse me, at around 41, we've got a lot of room once it breaks here to make a play. But as long as it's trading right within this defined range here, you can look to sell at the top and then buy at the bottom of this range, but we are not getting that true breakout that we would like to see within the marketplace itself. And that's why we have remained sidelined. So there's no doubt, you would think that with the dollar showing some real signs of weakness at this point, a considerable correction coming in after this protracted move that really began in June of last year, we are seeing a steady decline now, trading, as I said, at about 94.77. On this daily chart, you can see that we've had dramatic, consistent, and consecutive days of lower pricing in the dollar. Not enough, this weak dollar is not enough to be supportive to prop up gold in any way. As far as the equities markets go, we are looking at a Standard & Poor's half-a-day chart right now. We obviously have resistance and have a top at these record areas at around 2120. We can see that for a second time we tried to take that out, and now we are meandering back below this previous resistance line after the market has sold off dramatically today, down 16 points in the S&P, and the Dow Jones Industrial Average closing off by 195 points at 17,840. Silver also tumbling out of bed this morning, off almost 3.5%, 55 cents in terms of a lower price, 16.11. You can see that it did bounce off of these lows right below 16, 1580, 1585 in that area. We will be looking at our longer term view of silver. I'm sorry, time permitting, we did not have time to do that today. We will cover that on the weekend review. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekend review. Bye-bye.